What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Today, we're going to talk about infinite banking versus inflation and how it holds up against inflation. Answering the question, is the infinite banking concept a good way to deal with inflation? I personally think it is phenomenal for dealing with inflation, but I really want to do this video. I've actually been doing a lot more content about inflation because it's just out of control right now. I don't know about you guys, but I don't believe the numbers that they give us on inflation. I don't really believe the numbers they give us about anything anymore, to be honest. It's really sad. You know, I think at the time of this recording, inflation is like 3.2% or something like that. But that's just not true. We know this as consumers. Like, you go to the grocery store, prices have not gone up by only 3.3%. I mean, we have stuff, right? Like normal goods and services that we buy on a regular basis have increased 20, 50, 100% sometimes. And it's crushing people, right? And I think now more than ever, we need to be exploring different opportunities, strategies, concepts, methods, whatever, to deal with this problem, because it's not going away. I don't know that it's really going to get much better, to be honest. And the thing is, even though the inflation rate has come down, that doesn't mean prices have come down. It just means that the prices of these goods and services are going up a little bit slower. That's all. But that doesn't mean prices have come down. So what are you doing to respond to it? See, we can't do anything about inflation itself, right? And how much money they print, right, et cetera. But we can control how we respond to it. We can be proactive, implementing something like the infinite banking concept. Now, it's not for everybody. I get that. But maybe it is. How do you know unless you understand how it works, right? So what I want to do is give you a real life example of how I'm using the infinite banking concept in my life right now that is absolutely crushing inflation. We're going to talk about some very specific benefits of the infinite banking concept and why it's absolutely a game changer when it comes to dealing with inflation, because of how much money, how much wealth we're able to recapture and put back into our own personal finances, and how much of a difference that makes in our lives over the long run. So it's going to be a lot of fun. I'm excited. Just a real quick word from our sponsor. It's actually me, my other company, Reduce My FICA. We help business owners with at least 10 full-time W-2 employees significantly reduce their annual payroll taxes using health and wellness plans. And I'm talking about saving $300 to $500 per year per W-2 employee. Imagine what that could do for your business, adding that much money back to your bottom line, and how it would help you deal with inflation right now, right? So these health and wellness plans, really, really awesome for business owners, but also really great for your employees. It provides awesome health and wellness benefits to your employees at zero net cost to them. And so it's really good for employee recruitment and retention as well. So if you want to learn more about that, I will put a link down below. It's reducemyficanow.com. You can check that out, get some more information. All right, let's head over to my whiteboard. What I want to do is walk you through the real life example of how I'm using my policy to deal with inflation, right? So inflation is currently sitting around, well, based off what they tell us, I'm going to do 3.5%. I think it's like 3.2 or 3.3 right now. We're going to call it 3.5% because it certainly feels a heck of a lot worse than that, right? So first thing with the infinite banking concept, right? You're utilizing dividend-paying whole life insurance policies, not IUL. Okay, I've got plenty of training on why you want to avoid IUL for the most part. All right, so make sure you check that out. But we're using custom-designed dividend-paying whole life insurance policies. All right, and on the surface here, what again, we're talking about dealing with inflation right now. These policies typically net between 3 and 5%, 4%, we'll call it, net tax-free compound growth over the life of the policy. Okay, that's pretty good. I would call that a really good savings vehicle, wouldn't you? So the way I like to explain this is, if your bank down the street was offering you a savings account that was going to pay you 4% tax-free, uninterrupted compound growth for the rest of your life, allow you to use the money in the account to go build wealth like you normally would, which I'm going to show you here in a second, what I'm doing right now, without interrupting that compound growth. And if something were to happen to you and you passed away prematurely, hopefully not, but if you did, the money in the account would blossom into a massive income tax-free death benefit for your family. Does that sound like a good savings vehicle to you? Does to me. That sounds pretty awesome. That's exactly what we're setting up here with these policies, guys, right? This is the foundation of the infinite banking concept. And there's a very big difference I want to clarify between the infinite banking concept. It's a strategy. It's how we utilize what we're setting up here. The product is the dividend paying whole life insurance policy. We custom design it. All right. We're not talking about traditional 100% base whole life policies that Dave Ramsey and Susie Orman like to trash. That's not what we're talking about here. All right. These are custom designed policies that typically net 3 to 5% tax-free compound growth over the life of the policy. All right. So right off the bat, we are starting to keep up with inflation here. Okay. One, with the growth of the policy, but you have to think about the tax advantages as well, because the policy technically grows tax deferred, but you can access the money tax-free later on. All right. And if you think about the tax bracket that you're in, what does that do? Like how much money does that put back into your personal finances over your lifetime as well? Right. The more money we can put back into our life, the more we're able to deal with inflation. All right. So right off the bat, we're earning, I think, is a pretty good rate for a savings vehicle. Right. It's not an investment; it's a savings vehicle. We're getting great tax advantages, so we're putting money back into our life that way. Another thing, another aspect of this strategy that I think is very, very overlooked when it comes to building wealth and also just dealing with inflation: lost opportunity cost. Okay. I want to give you guys an example of this really quick, actually. We're going to head over to a compound interest calculator. I talk about this quite a bit on my channel. I use when I purchase my vehicle, I utilize my policy in order to make the purchase versus just paying cash. Here's what happens when you pay cash, guys, and actually even when you finance vehicles in a traditional way, is all that money you're paying to the bank or that cash that you pay to make your large capital purchase, that money's gone forever, never, ever able to earn another dollar of interest for you ever again, right? That adds up significantly. Watch. So what I did, let's say I paid $28,000 cash for my policy. All right, let's go over 40 years. So I'm 36 now. Let's go over 40 years. So I'll be 76 by the time this applies. All right, and like I said, my policy nets about around 4% tax-free compound growth for the life of the policy. All right, what does that number look like? So when we look at this, okay, did the car, if I paid cash for it, did it actually cost me $28,000, or did it cost me $134,000 over 40 years? Right. So because I put the money in my policy first, I borrowed against the policy using a policy loan. Okay. That money is still, that $28,000 is still earning that 4% compound growth in the policy, uninterrupted, because I'm using the life insurance company's money in this particular case to purchase my vehicle. Now, there is a little bit of simple interest involved with that, obviously, but it's a very, very small price to pay, guys, when it comes to eliminating this lost opportunity cost and earning that uninterrupted compound growth. So right here, implementing something like the infinite banking concept, becoming your own bank, whether it's to take advantage of wealth building opportunities or to start to finance your own large capital purchases, to eliminate this right here, put this money back into your life, right? This really starts to add up. This is a massive, massive benefit of this strategy, eliminating this lost opportunity cost. Really, really powerful. So the more money we can put back into our lives, the more money, or the more we're able to deal with inflation long-term, obviously. Okay. Now, some of the other benefits, obviously we get living benefits if with these policies. If we were to get diagnosed with a chronic, critical, terminal illness, we have access to a large portion of that death benefit as well. That's a really awesome benefit. We already talked about the death benefit a little bit, right? But these are just some of the foundational ways of dealing with inflation, like the policy itself. We're starting to get into how we actually use the policy, though. So we've gone through this lost opportunity cost here. That's one way that I utilize the policy, all right, to put wealth back into my life, right, to recapture it. Now, how do we actually build wealth with our policy and just absolutely annihilate inflation here? Okay, so what I'm doing is, again, I funded my policies. I have like full breakdowns on how I design them. If you want to check it out, I'll link those down below. But I put a significant amount of money up front into my policies in order to do stuff like this. And you typically have access to roughly about 85 to sometimes 90% of the amount of money that you put into your policy. You have access to that within the first 30 days. Mine was like the first couple of weeks, right? So what I'm doing now is, so I have my policy, okay, over here. And I have, I'm doing my very first private money deal. where I'm lending on a piece of real estate. So what I'm going to do is I'm going to borrow from my policy at 5.5%, because again, there is an interest cost to this, but it's a small price to pay to have this in place, guys. All right. And then what I'm going to do is I'm going to lend that out at 12% plus points. Actually, in my first deal here, I'm not doing any points. I go into why on the video that I'm creating, like that breaks down the actual numbers of this deal. But this is just an overall, just breaking down the overall deal of what I'm doing here, right? So I'm lending this out on a piece of real estate. Okay, so I'm paying 5.5%. I'm lending it out at 12%. All the while, I'm still earning the uninterrupted tax-free compound growth of my policy, because again, I'm borrowing the life insurance company's money right here, guys, not my own. So my money's continuing to earn the compound growth. I'm paying a little bit of interest to create that scenario, to get that compound growth. Plus, I'm able to use the money to go build wealth like I normally would. And this is exactly what banks do every single day. They pay us 1% in our savings account or whatever, and then they lend it out at 5%. Right? And they keep the spread. Right? So they pay 1% to earn 5%. It's a 500% or 400% rate of return, whatever. In my scenario, this is over 100%. 118% rate of return. Again, because I'm not using my own money. I'm using the life insurance company's money. My money is still in the policy growing, right? That's really, really important to understand, because I'm essentially making money twice here, right? And I've significantly increased my rate of return as well. So this right here, to me, is a scenario that just dominates inflation. Inflation sucks. It's really, really frustrating. But when we understand concepts like this, right? Different ways, different places to store our money, number one, right? Because when you think about it, the money in the bank, what does it do for us? It doesn't really do anything. It just sits there. I mean, we have instant access to it. That can be a good or bad thing, depending on what you're using it for. All right, but that's about all. That's really the only benefit we really get from having money in the bank, because it doesn't pay us a really good interest rate. You have to pay taxes on it. And then when you use the money in the account, you withdraw it, that money's no longer earning interest for you anymore. That money's gone, right? Versus if we have it in our dividend paying whole life insurance policy, we can use the money without interrupting the compound growth. Getting a pretty good, like when you set them up correctly, you can get a pretty decent rate of, I hate to say rate of return on, because it's not investment. We're not setting it up for that, but it is a really good bonus. It's a really good savings vehicle. 3 to 5% tax-free compound growth, right? And we can use the money without interrupting that process. And then we can identify these wealth building opportunities. Obviously, real estate is a phenomenal way to deal with inflation. I just did a video on some very specific strategies for dealing with inflation too, guys. If you want to check that out, I'll link it down below. But I wanted to share how I'm using the infinite banking concept to deal with inflation. This is a real project that I'm working on right now. I literally just wired the funds today on this deal. And if I can get all these benefits in my policy, and I can lend money out at 12% plus points, I mean, that's far greater than what inflation is. Now I'm starting to take back control of my money, my finances, the wealth building process, and my life. I'm keeping up with all of the stupid crap that government and Federal Reserve, all those crooks are doing, right? Because again, this is what we can control. It's like, where do we store our money? What do we do with that money? What are the wealth building opportunities we can identify to then use that policy for, right? And build wealth in the most efficient way possible. So for me, this is just a no-brainer. Of course, it's definitely not for everybody, right? It doesn't make sense for everyone, but I would at least recommend learning about it, because it could be really good for you. You need to know how it works. And I got plenty of training on infinite banking and stuff. Hopefully this helps. If you have any questions, drop some comments down below. I'll have a link to my calendar as well in the description. If you want to have a conversation about this, see if this concept makes sense for you. Always happy to chat. All right. So hope you guys are crushing it. And I will talk to you in the next one. To your success. Matty Ice is out.